Ever seen a whale make a splash so big it sends shockwaves through the meme coin ocean? Imagine a 190 billion token dump shaking up Pepper's price like a tsunami crashing onto the shore. Today, we're diving deep into the chaos behind this whale dump and figuring out what it means for your crypto portfolio. Hold on tight. This is one wild ride you won't want to miss. Hello, crypto crusaders and meme coin enthusiasts. I'm Zaki, your go-to guide on Zaki Crypto Update, where we dissect the craziest market moves with razor-sharp insights and a side of humor. Today, we're zooming in on the recent 190 billion token dump by a crypto whale and how it's impacting Pepper's price. We'll break down the numbers, the trends, and the market sentiment in a way that even your technophobic friend can appreciate. And if you haven't already, go ahead and hit that like button and subscribe. Trust me, you're in for a roller coaster of analysis and laughs. In this video, we'll uncover why large Pepper transactions skyrocketed from 8 trillion to 31.9 trillion tokens in just 24 hours, how whale selling might be clouding the meme coin's long-term outlook, and the key technical levels you need to watch. Whether you're a die-hard fan of Pepper or simply curious about how whale moves ripple through the market, stay with me until the end because we've got a twist that could turn bearish momentum into a bullish breakout. Before we get too deep into these turbulent waters, do yourself a favor. Click that subscribe button and ring the bell. This way, you'll always be the first to know when we uncover another crypto mystery or market phenomenon. Your support keeps this crypto engine running at full throttle. Let's jump right in. We've witnessed a massive whale dump of 190 billion tokens on Pepper, and the numbers don't lie. This is a huge red flag in a market that's already under bearish pressure. The meme coin space, already rattled by a recent pullback across the board, saw its total market capitalization dip by about 1.2% to $79 billion. And while Pepper did manage to defy gravity for a moment, posting a 7% gain in 24 hours to hit $0.00000099, the storm clouds are gathering on the horizon. Now, let's break down the numbers. Data from Into the Block reveals that large transactions exceeding $100,000 surged from 8 trillion to a staggering 31.9 trillion tokens in just one day. But don't let that number fool you. The spike is almost entirely due to selling activity. Think of it like a clearance sale at your favorite store, where the massive discounts are less about profit and more about a frantic rush to unload inventory. In this case, the inventory is a whopping 196 billion Pepper tokens sold by whales in a single day. This isn't just a statistical anomaly. It's a clear indicator that major players are cashing in, sending a signal of dwindling investor confidence. When whales start offloading large amounts, it usually suggests that the big fish are wary of the choppy waters ahead. And with whale addresses holding a hefty 48% of Pepper's total supply, any significant distribution can put serious downward pressure on the price. Let's talk technicals. The Relative Strength Index, RSI, has dipped to 30, and the RSI line is stubbornly hanging below the signal line. This confirms that bearish momentum is firmly in control. Imagine trying to climb a hill while the wind constantly pushes you back. This is exactly how Pepper is struggling to gain traction. And if the meme coin loses support at the lower Bollinger Band, currently at $0.00000906, we could see the price plummet to a liquidity collection level of around $0.00000796. On the flip side, there's a glimmer of hope. If the bulls manage to flip the resistance at $0.000014, we could witness a strong reversal. But for that to happen, the RSI needs to pivot north and cross above its signal line. Only then will we see a surge in buying pressure. It's a high-stakes game of technical chess, and every move counts. Now, let's add a bit of color to these numbers with some good old-fashioned crypto opinion. In my view, while a 7% gain might seem like a win in the short term, the underlying data paints a more cautionary picture. Whale selling is not just a one-off event. It's a reflection of broader market sentiment. When large holders start liquidating their positions, it usually spells trouble for the rally's sustainability. It's like watching the captain abandon ship. If the big players are out, who's left to steer the course? And here's another twist. The derivatives market is echoing this negative sentiment. Open interest has nudged up by 6% in 24 hours to $268 million, but most of this activity comes from short sellers. Funding rates have been negative for the past couple of days, indicating a high demand for short positions. The long/short ratio has fallen to 0.95, meaning more traders are betting against Pepper than for it. In plain language, the crowd is piling on the pessimism. But here's the kicker. Sometimes, a market overrun by short positions can lead to a dramatic short squeeze, flipping bearish sentiment on its head. That's a scenario worth keeping your eyes on, even as we caution against overexuberance. Now, if you're feeling overwhelmed by all these technical terms and market jargons, let me break it down with an analogy. Imagine Pepper as a once popular party animal now, struggling to keep the party alive. The whales, who used to fuel the festivities, have decided to leave, taking their massive stash of tokens with them. The crowd is now filled with short sellers, those party poopers betting that the party will end soon. However, if a burst of unexpected energy or buying pressure manages to rally the remaining partygoers, we might just see a revival of the festivities. But until that happens, caution is the name of the game. At this juncture, it's critical to remember that every move in crypto is a gamble. My analysis reflects my own research and personal insights. This is not financial advice, but rather a deep dive into the market's pulse. Always conduct your own due diligence before making any investment decisions, because as the saying goes in our world, only invest what you're willing to lose. Now, while Pepper's current state might seem grim, it's important to remember that the crypto market is nothing if not unpredictable. History has shown us that volatility often precedes opportunity. For all the doom and gloom in the short term, there's a possibility that a well-timed rally could catch short sellers off guard, forcing them to cover their positions and triggering a surge in buying pressure. It's the classic tale of chaos turning into opportunity. If you can weather the storm, the aftermath might just be the calm before an explosive breakout. If you're finding this deep dive into Pepper's whale dynamics as riveting as I do, make sure to hit that like button and subscribe for more sharp insights, spirited debates, and a few unexpected twists along the crypto journey. Your engagement not only supports the channel, but also ensures you never miss out on the next market revelation. As we wrap up today's analysis of the 190 billion token whale dump and its impact on Pepper's price, I want to thank you for sticking with me through the highs, lows, and technical detours. Whether you're a seasoned trader or a curious newcomer, I hope this video has shed some light on the intricate dance between whale activity and market sentiment in the memecoin realm. Remember, every token movement tells a story, and here on Zaki Crypto Update, we're dedicated to unraveling those stories with honesty, humor, and a healthy dose of skepticism. If you enjoyed this analysis, I invite you to check out more of our videos covering everything from technical breakdowns to market rumors and beyond. Your support is what fuels these deep dives, and I can't wait to continue exploring the cryptoverse with you. The information presented in this video is provided solely for educational and entertainment purposes. It is not financial advice. Always perform your own research and consult with a professional before making any investment decisions. Cryptocurrencies are highly volatile, and you should only invest what you can afford to lose. Thank you once again for joining me on this thrilling journey through the complexities of Pepper's market movements. Stay sharp, keep laughing, and as always, invest responsibly. I'm Zaki, signing off. See you in the next video on Zaki Crypto Update, where the next big crypto story awaits.